so on and so forth. We specialize in valuation services, and you'll hear a little bit more today about the range of services we have. A couple of housekeeping things before I get started. You can ask questions anytime during this live presentation, where we can watch for your questions on the webinar service, and we will address these as time permits. I'll address some of them during the presentation and some of them at the end. If there's something that we don't get to, please rest assured that we will reach out to you after the presentation and ensure that we have the answers to you. A little bit about objective valuation and what we do. We have established objective valuation in order to provide appropriately priced valuation services for a range of stakeholders, company operators, promoters, entrepreneurs, accountants, legal professionals, current business operators. There's a wide range of people that can benefit from valuation services. And over the past 11 years, objective valuation has focused on providing valuation assessments and solutions to hundreds of private and public clients worldwide. We've done a range of industries, companies from big to small, divisions of companies, specific operations of companies, as well as potential M&A targets and other actions by companies, all of which we've been able to address with our wide range of our professional team. The outfit is owned and managed by a team of professionals with many years of experience and many professional degrees, MBAs, CFAs, chartered accountants, a wide range of skill sets that we can bring to each and every project. Objective valuation is a truly independent valuation services provider. Many of the other potential service providers that you'll find out there might be investment banks, might be the accounting firms themselves, might be affiliated with the legal team. None of those allow for the independence that is truly needed to ensure that the effort you put into a valuation project really resonates with the stakeholders and the potential investors and shareholders that you're looking for. We have a very robust process that allows for timely and high quality and consistent delivery of output, and we ensure that senior partners are involved in every project that allow us to really deliver a top-notch product customized to your needs. So why is valuation required? Well, a business valuation is truly unbiased from a professional third party. Does a very good, brings good value. It helps the company backers understand their operations and the market value of those operations. It reduces default risk and strongly reports independent price verification, which can be key here. You know, evaluation done from an independent appraiser can be an insurance policy against tax assessments and accuracy related penalties. So all of these things are key in having the regulatory compliance and administrative compliance that you need. One of the things it allows us to do is avoid conflicts of interest. It avoids reputational risk, which can be key. So this is something that we're able to help our stakeholders provide. And of course, it's, as always, ensuring compliance with all of the latest rules. Which provides an excellent opportunity for people to fully understand the benefits of what is being brought to the market. Let me just make sure we're all set here. So crowdfunding has become an important avenue for fundraising for new projects. Certainly here in the U.S., we've seen a real level of interest in this in recent years. It's an evolving concept, allowing for democratization of higher return investment opportunities. It really spreads the availability of investors much more broadly than the traditional Wall Street-based model. It allows companies to seek funds from a large number of potential investors through online funding platforms. Crowdfunding is very attractive to startups as they lack support from banks, and they don't have the track record typically to attract the kind of traditional funding, so crowdfunding comes into play. Crowdfunding has a variety of formats: equity-based crowdfunding, reward-based like a Kickstarter campaign, donation-based crowdfunding, more for nonprofits and other charitable things, and debt-to-loan crowdfunding. Debt and loan crowdfunding. We'll be focused today mostly on equity-based crowdfunding because that's where the evaluations can really make a major difference. A professional valuation report really sets you apart in a fairly crowded field. Independent valuations can be done early in the process. They can speed the process, allowing you to promote your business, fine-tune your business plan, as well as boost investor confidence. And there's a lot of people that benefit from a proper crowdfunding valuation report. Clearly, the investors. It allows them to focus on the opportunities that are being provided. It allows them to quickly assess the opportunity and provides a one-stop shop in terms of getting the information that they need and comfort with the valuation, the investment opportunity. Of course, time and skill set and resources are difficult sometimes for these more dispersed investors to invest in each opportunity, and a professional valuation helps you with that. It helps them evaluate key factors pertaining to the investment decision. It certainly helps the business itself because it allows the management team to crystallize their view of what they're bringing to the market and the value of their business. Often we find in the exercise of doing the valuation for our clients, we highlight to them where the value resides, and it allows them to focus on the highest value parts of their operation. And many clients have said that this has helped them in the process of fine-tuning their pitch and staying on track. It gives the backers insight to market opportunity. Perhaps they have underestimated or overestimated the opportunity that they're seeing in one part of their business, and we help them focus their attention. One of the challenges that any entrepreneur faces is translating their vision and their commitment to a certain business and opportunity to a broader audience. Often these backers have become very invested in their business and the opportunity that they're backing, and they sort of get stuck in the weeds in terms of conveying that information and aren't able to convey that information to a broader audience. So having the valuation report, having an extra set of eyes, an independent and objective set of eyes on that opportunity can be extremely helpful. So the beginnings of crowdfunding here in the U.S. are really based in the 2012 Jumpstart Our Business Startups Act, or JOBS, J-O-B-S. This is the first time we had rules and regulations relating to crowdfunding, and it provided important guidelines to relate to registration with the SEC and with respect to shareholders. It was really an opportunity to bring fundraising into the modern age, to start to include some of the other channels and the digital channels that were opening up in all parts of people's lives, and bring that in a way that protects market integrity into the fundraising model and the capital formation model. Some of the major legal aspects of raising funds through crowdfunding are highlighted on this slide here. The fundraising limit up to $1 million over a period of 12 months. That's important to keep that in mind to ensure that your use of proceeds, your targeted amount you're going to raise are all properly within that $1 million. It's the worst case scenario is to raise that $1 million and then not be able to get to the far side of your business plan and be successful. There is, however, no restriction on other channels. So we always encourage our clients to take the valuation work that we're doing, apply it to their crowdfunding channel, as well as talking to other sort of private banks and other opportunities, high net worth family offices and other institutions that might invest. So it doesn't close off under other channels. And fortunately, our valuation output is applicable to any of those kinds of potential funding channels. So that's important. So it's important to understand when you need to register with the securities with the SEC, and there's a very important threshold here. So if the issuer has total assets exceeding $10 million and 500 shareholders who are not accredited investors, or 2,000 total shareholders, they have to register those securities with the SEC. So if you stay below those targets, we encourage our clients to manage their experience in order to stay below those targets in these initial phases in order to keep this crowdfunding channel open. There are different limits for people with net worths under or over $100,000, and we can help clients better understand that and help them assess the market and deliver a valuation product that addresses both those larger and smaller investors. You'll find that many of these investors, once they get used to the concept of crowdfunding and these other smaller investments, they will be looking at multiple projects, and they'll spread their investment across a number of different investments. That's fine. There's no limit on the number of companies in which the investor can invest, but they will be locked into each of those investments for quite a long time, minimum of 12 months, unless the sale is to a family member, the issuing company, or an accredited investor. So there are a couple channels, a couple exit paths, but a minimum of 12 months before selling her stake, unless it meets one of those other criteria. There is some requirement to have background checks on people and businesses with a 10% or greater ownership in the company. We can help with that in the services that we provide. We get very close to these companies, and we understand well where all these pieces reside. So please, if that comes up as a question for you in your operations, please do ask it. So Objective Valuation is your partner in this process. We have a very high-touch, iterative engagement with you. We have a kickoff meeting where we make sure everyone's on the same page. We spend a lot of time understanding the crowdfunding requirement analysis, which is crucial because we want to make sure we go down the right path and stay within the boundaries of crowdfunding, while also getting you valuation product that you can use for other channels. The legal impact is critical. We need to make sure we understand what the legal impact is. Then we really delve into the company and industry analysis. This is a critical part of our skill set. This is what we do, and we're very good at it. We take more complex investment opportunities, digest them, and synthesize them into a strong investment document and evaluation document that people can really get behind. That's what we do. We take that off the management's shoulders and deliver a very high quality, independent, objective output at the end. Then, of course, we provide a fair valuation, and this is important. We triangulate on the valuation using a number of different valuation metrics that are appropriate in that industry. We always make sure to use multiple paths to get to our valuation targets to ensure that if someone has a preference for a certain style of valuation, we can highlight that, but always using multiple paths to get to a valuation is really critical. And of course, the client is part of this. We say client review here at the end, but in reality, the client is part of this every single minute, and it's an important partnership that we set up with you. So very important to understand that an independent valuation is important to all of the crowdfunding stakeholders. And I know we have representatives from a lot of parts of the industry here on the call today, and that's great. But I want to remind everyone that this is not just good for investors. It's not just good for the management team. It's not just good for the crowdfunding platforms. It's good for all of these people. So the businesses don't have the track record, and the independent valuation helps digest that product or idea and make it presentable to a large group of investors. It helps the backers themselves understand their business better. This has been a part of the business that we did not imagine would be as critical as it is in many cases today. We really help refine the business plan and the business outlook through our operations. The platforms, there's a growing range of platforms, and they benefit significantly from this. So people who are running these kinds of platforms, please do get in touch with us about our experience with having this be a recurring revenue stream for you, which helps you stay in touch with these companies, helps you have additional interaction with these companies. It also certainly helps incubators, helping them get their novice business proposals bankable. This is a critical part of what we can do. The incubator takes the companies a certain distance. We can help provide the foundation to get them to the next step, which is critical. And of course, investors themselves. It provides investment ideas in an approachable way. The valuation report provides confidence for the investor that decisions have verifiable backup and support in the future. One of the challenges that smaller companies face when they're starting to raise money is ensuring that they have the record keeping and the backup in case things go wrong or go differently than people expect. An independent valuation allows you to tick that box in a way to say with confidence and pride that you have done everything you can to ensure that the valuations are appropriate and the direction of the company is appropriate, and not just something that you yourself promoted the company on the back of, but something that a professional group like Objective Valuation can really stand behind. So Objective Valuation understands the importance of independent valuation services in a wide range of situations. Crowdfunding is one of them. It's a growing part of our practice. We're finding that all of the stakeholders benefit from a truly independent valuation, and it helps smooth the path to financing. It helps that financing be less expensive, and you get it earlier in the process, so management can focus on growing and expanding their business. So we do have time for a couple of questions. I have some that have floated in already. There's a question about the tax implications, and that's a good one, and one that we can certainly help with. So in the U.S., funds raised through crowdfunding are treated as paid-in capital for the company. Neither the company nor the purchaser is subject to taxes at the time of purchase. It's only a taxable event when the company which receives the funds spends the invested capital and the purchaser of equity sells the purchased shares. So that's a critical aspect of this. You need to understand that the investment itself is not the taxable event. It's the deployment of that capital and the sale of those shares longer term. I have another question here from Stanley A., who's asking if I could go a little bit more into the platform business. Stan, this is a big part of the value that we can bring. There are a number of these digital networks that are popping up now that are trying to collect many deals and put them out for people to look at. You can really set yourself apart by offering this service up front to your clients. It helps weed out those ones that have the commitment and the professionalism to understand the importance of an independent valuation, and it absolutely speeds the path to funding. And one of the things that these platforms are now facing is questions from potential listings or listers on their websites. How successful have you been? What is your percentage success rate? And I think the people that are offering a full suite of services, including independent valuation by a third-party professional service like Objective Valuation, will set themselves apart. They will be more successful. They will be quicker to get to that success. That will attract more applicants to list on their platform, and of course that provides the opportunity for the platform to select those that are most likely to be successful. All of these platforms need to realize that taking on a multitude of projects is not the path to success. Taking on a good, diverse range of projects and making sure that you have good successes is the way that you're going to ensure that you're the go-to place for the highest quality projects. So Objective Valuation welcomes partners in the platforms. We can work very closely with a wide range of stakeholders there, and that can really make a difference in the success of that platform. It's a question about international from Alex. Alex, We've looked a lot at the UK and done a lot of projects there on the crowdfunding side. We've done a lot of valuation projects around the world, but this idea of crowdfunding is not as well developed in some of the other markets. Certainly in the US and the UK and certain parts of Europe. But I would say that valuation services and an independent third-party valuation document helps any kind of funding. It doesn't have to just be this crowdfunding route. Any kind of funding, any sort of corporate decision about capital deployment, M&A, a spinoff, an employee buyout, a management buyout, any of those things are enhanced and protected by the presence of an independent valuation. Well, thank you everyone for your time today. We have been very, very pleased with the wide range of projects we've been able to see recently. The objective valuation is a prime partner for a wide range of people looking to have the most professional offering that they can have. Crowdfunding is a great part of that. There's a lot of different stakeholders that we can help, and I hope we've addressed some of those questions and issues today. We will be sending out copies of the presentation to you, so hopefully you'll have that. And please do reach out to us. You can call us 415-413-3532 or email us, and we look forward to hearing more about your project and being your partner in having a successful fundraise. Thank you for your time today, and good luck on all your endeavors. We look forward to working with you.